Happy Sunday. Welcome to today's Money Church. Before we get going, I want to say happy Father's Day to all the fathers that are out there. Appreciate you all for doing your duty, right? I know we don't need appreciation or thanks, but I'm going to say it anyway. I see Corey's here. Definitely want to give him a happy Father's Day salute.
Same to you, good brother.
Today we are talking about risk. Jimmy's got a wonderful presentation lining up risk and how traders can take advantage of risk and what they need to know with risk, because oftentimes people get their shirts torn off the frame because they don't understand risk that they are taking on when they get into trading and investing, but especially trading. But how y'all doing today, man?
I'm tired, but we here, so let's get it.
Yeah, I mean, before we get going too, we did it. We had another successful Cash Bomb pod class. It was great. I feel good about it. How do y'all feel about it?
Nah, listen, I feel phenomenal, man. I want to say shout out to everybody who showed up. We appreciate those that showed up in person, man. Got to build with, supported another Black-owned business, and I'm just emotionally and just physically exhausted, bro. From Thursday to yesterday, it was just like a whirlwind. But, I'm here, and that's what matters, man. I got the presentation for y'all, you know what I'm saying? And but yesterday was definitely dope, man. Always great to share energy with folks. We had a great lunch afterwards with a lot of the folks that came through. Shout out to our brother Bar. Bar had one of his billionaire friends in the building. I got to chop it up with that brother and get some game. So that was dope. So everything was dope, man. Like I just appreciate the support that folks give us, man. And we, right back in the community in a couple of weeks with our camp starting. So the work continues, man. The work continues. And the crazy part is we got more community work coming even after the camp. So when the camp is over, we just continuously building the community. Like I said yesterday during the pod class, like it's now about institution building, man. Enough talk. You know what I'm saying? The internet stuff is cool, but we want to create some stuff that outlasts us. And I think we are that this journey is
the village is an institution, man. Like we're not trying to build something for money or whatever people do. We want to build an institution where people support one another, and we want to build something that creates an opportunity for the people that participate at the level that they want to participate at. You know what I mean? So we want to be able to help people. We want to be able to help people get help. And we can't do it without you guys. You know what I mean? Like we love y'all for real. And because of the support y'all show us, we're able to do so many things in the community. And when y'all bring us the energy like y'all did yesterday and like y'all do when y'all show up to these shows, it just helps us do so much more, because the more we can do, the more we will do, because that's who we are. So we need, we need that energy. Like it ain't even money or energy, just money helps, but we need y'all energy. Show up for us, man. Bring y'all presence, and we'll do what we do. Just show up.
Right. Yeah. No. All right. So this is a great pick that Jimmy got. I don't even know where he got it. Oh, you said tomorrow.
Yeah. I got the
Yeah. I had to put this out because I love this picture, even though I'm not really looking for it. But this is Joel. That was our guest from IB Big, the president of IB Big. We got Jimmy, myself, and Corey. Corey's looking right at the camera. But at this Black-owned business, this is why Black-owned business is so important. They highlighted all these great Black icons who are drinking coffee. So it's on theme with their business, but it's just wonderful. Just wonderful.
Yeah, they got the guy Bob Marley, you know what I'm saying? Sammy Davis.
Bob, Stevie,
they got Mike and Bubbles, yo.
Yeah, how about that? I was cracking up at that.
Rest in peace, Bubbles.
Bubbles got the coffee too, huh?
How many other monkeys names you know? We know Bubbles though. You know what I mean? Shout out to Bubbles.
All right, well, let's get it going, fellas.
Yeah, man. Shout out to everybody who's here live, man. Today we're gonna do a quick class, because this is part of what we do on Sunday is we try to give a little game. You know what I mean? It's not just about coming to kick it, So You ain't got a lot to kick it too. So, and by the way, if you're in the village, and you can join the village by going to blackwealthrebels.com. It is completely free to join the village. Please join the village and support us. A lot more coming in the village. We still got our other live show plus the live show yesterday that we'll be dropping in the village. You guys will get access to that way before the world. But I say that to say this. If you're in the village, the PowerPoint presentation will be under the options training 101. So make sure you join the village by going to blackwealthrebels.com. But today we're going to talk about managing risk in the markets, a trader and an investor's guide, right? So you want to learn essential strategies to protect your capital and maximize returns. This is important for traders as well as long-term investors, right? You have to learn to manage risk. Many people don't talk about risk at all. You hear all these things about run this play or buy this or dividend that or appreciation, but risk is something that you really have to factor in as a trader and or an investor. What's the famous Warren Buffett quote? Like, the two.
I was just about to say that.
The first rule is what?
First rule, not to lose money. Second rule, don't forget the first rule.
There you go. Don't forget rule number 1. That's it, right? So,
but people don't realize that the way you protect your money is through risk management. So.
And it's funny, right? Taking it back to yesterday. So Jabbar had a gentleman with him who hit the B status, and I've seen it, so it's documented. But he's worked in institutions such as Fidelity and a lot of the bigger banks. He's an executive there, and he had a conversation with Corey and I, and he was talking about what we've built with our investment club and how to take it to the next level. And one of the things he said what was interesting to me is he talked a lot about risk. And he said, as you grow, that becomes more important. And he was talking about hedge funds. He said that, he's run hedge funds. And he was saying that in hedge funds, a lot of times people say, well, this hedge fund only beat the S&P by a couple of points. And he was saying, if you're a hedge fund and you can beat the S&P by a couple of points, you're successful. He said, because the idea is not just to make money in an up market, but when the market shifts to go downward, how are you protecting that capital? He said, so it's not, he said, the comparison that people make, like, well, such and such only beats the S&P. He said, but how do they do during the down years, right? If the S&P is down for a year, are you able to even stay at zero or sometimes make a small gain or even a small loss? And as you get bigger, the idea of risk management becomes even more important. But this also applies to you as an individual investor. The bigger your portfolio becomes, the more important risk management is, right? So you might be in a phase where you're in super growth mode, but once you grow capital, to me, the magic number, there's a couple magic numbers to me as it pertains to growing a portfolio and an investment. The first one is $1,000. If you're starting from nothing, getting to that first $1,000 to me is very important. Then the next step to me is about 10,000. When you hit 10,000, and I say all this is just watching how compound interest works. But the number one number, when you get to the point where you got 100K, everything changes. Everything changes from that point. But the idea of risk management becomes more important the bigger that your portfolio grows. And if you have a trading account, right, the idea of risk management is just as important. But let's get into the presentation, though.
Well, that's part of the presentation, though.
Well, I should say let's get into the next slide. Keep it close. So what is risk in investing and trading, right? So there are market risks where you have losses from overall market movements, right? So sometimes the market may shift based upon what phase we're in the market and also what's going on from a macroeconomic level. There's also something known as liquidity risk. If you're unable to exit positions without price impact, right? So one of the reasons that, and I always tell the story about, getting involved in penny stocks early in my career and, having these pipe dreams of me buying something at 50 cents and it's going to be $50, right? But one of the things I learned through that process is the importance of liquidity. I had several positions that I was right in my analysis, but I could never get out of the trade because there was no liquidity there. So liquidity risk is a real thing. Also, credit risk. Counterparty fails to meet obligations. So credit risk to me, it speaks about a couple things too. So Charlie Munger has a quote where he says the things that get you in trouble, as you're starting to try to build a portfolio and make your money grow are ladies, liquor, and leverage, right? And I bring that up because the 3 L's, ladies, liquor, and leverage. That's his joke, but the leverage thing is real. Leverage is cool if you're on the right side, but if you're on the wrong side, leverage can wreck everything that you got going on. Could completely, kill years of work. So credit from a couple of different standpoints, from a counterparty failing to meet obligations in terms of the underlying that you're trading, but also from a personal standpoint, if you're using leverage a lot, please be careful with that risk. All right, so the biggest risk out of all of them is this, in my personal opinion, psychological risk, emotions leading to poor decisions. Most of the important parts of trading, and it's a great book called The Psychology of Money. What's the author's name? Morgan Housel or something like that. Come on, I know you know that because
Morgan Housel,
yeah, Morgan Housel. That's the author. The Psychology of Money.
Books. So here's a side note. I did a whole review on that I never published.
You didn't like it, or
it's a dope book. It's just in the vault. I never got to it.
Yeah, we got so much vault content. It was something I was thinking about yesterday. I was like, yo, that's still in the vault. We never dropped it. I forgot what it was. It was something I was
We got a couple things that's still in the vault that we ain't dropped yet.
Yeah, a lot of stuff. Anyway, with all that being said, psychological risk is real, right? I've seen people that are great traders. They're great at doing their analysis. They're great at running their mental models. They're great at seeing the market and how it's going to move. But the psychology is the problem, right? So it's why I hate. It's something. Shout out to our brother Pat. It's something that I learned from him. Is why I hate the phrase that no one ever loses money by taking profit, because Pat broke down mathematically how that's just not true, right? If you because of psychology, if you're always making gains, but your gains in terms of percentage are smaller than your losses in terms of percentage, then you can take profit. You're going to lose, right? But the psychology is the important. Listen, it's something I struggle with to this day in my Deontay Wilder voice, right? Because a lot of times where the psychology gets me is the greed monster on my shoulder, right? I call him Little Corey, the greed monster that be on my shoulder because he got the gambling spirit, right? Like my brother over there. So what'll happen is I'll be right about a trade, and I have this thing now where I just try to make 21% on every trade. I'll hit 21%, and it's like, all right, I know fundamentally that's where I got to cash out. But then that, Little Corey be like, man, F that, man, go get 50. The market. The little Corey be like, the market think you soft. You let the market talk to you like that. so next thing I know, I'm hanging around knowing 21% is my number. Then the market shifts and now I'm down. Right? So that's something that I deal with, constantly. The way to avoid that, and there's ways to avoid that, and we're going to talk about that, shortly. But I think that the psychology of trading and investing, by the way, because that's not just a trading thing. You can make those same mistakes in investing, right? And we're going to talk about that. So investing is long-term wealth building over years and decades. And I say years and decades because I have this philosophy that when you go into an actual purchase of an investment, if you're not willing to hold it for 5 to 10 years, if nothing fundamentally changes in that business, then you shouldn't buy it. Now, a couple caveats. First caveat is anything I say on this show is for entertainment and educational only. This is not investment advice. I'm not telling you to buy anything. I'm not telling you to do anything. I am not your fiduciary. I didn't stay at a Holiday Inn last night. I'm not telling you to do anything. Educational and entertainment purposes only. But what I'm saying is when you do your analysis on a purchase coming into a company, if you believe in that business, and I'm going to say it again because I promise you guys every Sunday I'm going to say this, when you buy stock, you're not just buying this random number. You are buying equity in a company. So from an investment standpoint, if you believe in that company in terms of how they make their profit, what their financials look like, and that you have a long-term investment, then you make that investment. However, if something fundamentally changes with that business, they change their entire business model. I see a lot of business models changing now with specific companies, and they're clout chasing though. I was just talking about this yesterday. There's some companies now that are putting AI in their name. They're doing AI this, AI that, and there's nothing AI about there. I saw a real estate company. I'm not going to mention any names because I actually know the owner of the company. They changed their name to something real estate to like real estate AI. And it's like, you buy and sell houses. What the hell is AI about that? Anyway, I say all that to say this.
They want the SEO power, man.
I get it. But if something fundamentally changes with the company, that may be an example of when you release something that you thought you would invest in long term. However, it's really about doing a due diligence. So long-term investing deals with managing through diversification. Time horizon reduces your volatility impact, and you focus on the fundamentals of that company, right? So time horizon reduces your volatility impact. If I'm buying something for a long period of time, and so the ebbs and flows of how it moves in the market kind of doesn't bother me, right? So an example of that in my personal portfolio is Top T. Top T, when the market drops, Top T drops. But when the market booms, it booms. But the fact of the matter is, it's something that I plan on holding for. I'm never selling it.
All right, so Jimmy, I got a story for you.
All right, I got a story to tell. Story time, Kamari.
Real quick. Y'all know I broke down the other day on 76 for like 5 hours in the middle of the night. So I take my car to the shop Saturday morning before the event. When I go to the shop, I have a relationship. I talk to the guy, the attendant at the gas station, because it's a gas station and a mechanic spot. And so when I walk in, he's talking to the other guys about investing. I just smile. And he's an older gentleman. He's about 60. And so he's like, yeah, by the time I get done, because I'm never going to retire, but I'm building my portfolio, so I should get about $5,000 a month in dividend stocks. So I'm telling all the guys to invest in dividend stocks. I said, okay, that's cool. And he knows I do investment as well. He watches my channel. I said, also, you might want to think about top T. I said, for some of the younger guys, because I know what you're going after. But for some of the younger guys, they need growth as well. But just something to think about. Just something to think about. And I left it at that. But I was like, I got to tell Jimmy about that. That was all Jimmy.
Hey, listen, man, I appreciate that. I appreciate that, beloved. You know, it is what it is, man. You know, we a team. I steal from you every day, so it is what it is. But what I'm saying is,
you know what? You know what's funny? Jimmy said that to me the other day, and I was like, wow, this guy is flagrant.
No, listen, but I tell you up front.
Listen, man, we use each other's phrases and all that kind of stuff.
Listen, I tell you up front, though, I say, Kamar, it's a good idea. I'm taking it, right? You know what I'm saying? Like, it is what it is, man. But here's what I'm saying, though. When you have an investment like that, it's funny. We were just watching a video this morning. Steve Ballmer, the former CEO of Microsoft, was doing an interview on a podcast. And the guy was saying that, yo, like you give away $1 billion a year. And Ballmer's response was, but I get $1 billion a year in Microsoft dividends. Like outside of my holdings and the appreciation, I literally get $1 billion in dividends. So I'm just, I'm at a net zero just from giving away $1 billion. But one thing he said though is he's held forever. He was one of the first employees of Microsoft. He said he's never selling. So his long-term approach is he's going to hold forever because that's the company that made him a billionaire. But I say all that to say this. When investing, that long-term horizon is very important and it reduces volatility impact, which helps to minimize risk because, again, we're talking about risk this morning, right? So from a trading standpoint, it's a little bit different. We're talking about short-term speculation over days or weeks. So you can manage this through tight stop losses. Stop losses are so important. If you're very good at your stop losses, this can help you reduce risk. Strict position sizing rules, right? Understand position size. I have a story about this, I'll tell you shortly, but if you have a portfolio, if you have an account, and one thing that I tell people, not investment advice, is if you're going to do a little bit of trading, create a separate account from the account that you invest in, right? So you can manage those capitals different ways. And, if you use like Schwab, like I do, or whatever, it's easy to separate it. Crazy part is one of my favorite brokerages, and I've been saying this forever, and this is not, a plug for them, but I do love what SoFi is building with their brokerage. But what they do with their brokerage, which makes it interesting, is when you take an options trade, even if it's in the same account, they have a whole separate column, like a bucket for it. So you can it's kind of doing the same thing, but they're doing it within one account, which is dope. But if you're on Schwab, you can create a separate account. I say that to say this: you manage those accounts differently, but you have to understand positioning size in terms of the size of the position you take within that options trade, and don't risk your full account on every trade. I've seen some YOLO folks, right? And I have a story of someone I'm not going to say their name, but they were telling me a story about how during the pandemic they got into trading, and a lot of folks did because we was all at home, figuring stuff out, and people got into trading, and some became pretty good at it and have taken that as a skill set that they use post-pandemic. But right. So this is a story of someone who shall remain nameless, but they told me it's okay to share the story. They started with about $1,000, right, during the pandemic. They were so good on their trades during the pandemic. And remember how the market was booming during the pandemic. They went from $1,000 to $50,000. $1,000 to $50,000 within a couple years trading. They got crazy and start making $30,000, $40,000 trades. Made a $40,000 trade on Tesla, went YOLO, no stop loss, no nothing. Cracked their account. They're back down to like $5,000. They went from 1,000 to 50,000, and now they have like 5,000 because it was like Tesla's earnings didn't go the way they thought. Cracked their account because they started getting. Well, first of all, it was a couple of things, and they were honest about it. They started thinking they were smarter than they actually were. Right? I've taken this account from 1,000 to 50,000. I know exactly what I'm doing. Forget stop losses. Forget all these things. You can't tell me nothing. The ego got out of control. Ego is the enemy. Another Greek.
Well, people don't realize when they get lucky, because a lot of this is luck. It's not skill, and they won't admit that a lot of times.
Timing is everything, right? Think about this. So a lot of folks that I know who are currently real estate millionaires got into the game after 08, right? And if everybody remembers what happened in 08, we had the huge crash. So timing is everything. If you got into trading during the pandemic, right, we was rolling. You went through the whole GameStop phase. You went through a bull market. Like, timing is everything. But this also goes back to the idea of risk. It's easy to look smart in the bull market, but what do you do, when everything changes? You know what I mean? Like, because a lot of us get excited. We think we're smarter than we are. We start chasing waterfalls. We don't stick to the rivers and lakes that we used to. So, but when you live through things, right? When you live through the .com bust, when you live through the Enron situation, I remember that too, right? You start to see that it's a difference between just going on a bull market and making a bunch of money versus understanding risk and how to manage an account. Managing an account is something that we all have to do from a personal standpoint. Unless you just want to set it and forget it with some ETFs, which is cool, by the way. That's probably what 99.6% of people should do. Just made that number up. Anyway, technical analysis driven is something that you use with trading, right? And we talk about our technicals often within the village. But I personally am a mean reversion trader. So I like to see things move away from the mean and either come back to the mean or go back up to the mean. That's literally my whole entire thesis. My whole entire thesis is something that I learned in stat class back in high school, which is crazy. But that's what
everything reverts back to the mean.
Yeah, I went through all these different things. Listen, I have paid thousands of dollars. I've went to back then it was TD Ameritrade. I paid TD Ameritrade to go to their class and learn about trading. I've paid all kinds of online courses and all that, and then end right back up with something I learned in high school as my main strategy, which is mean reversion. But anyway, I say that to say this: technical analysis is primarily a way that people trade. It's not the only way. We have a class on fundamental versus technical analysis that's in the village. Go to blackwealthrebels.com to see that class. Now, with that being said, some risk management strategies. The first thing I want to say is you got to have a plan. Entry, exit, and risk defined up front, right? Now, that's where the psychological part comes into play because I have a plan that I go through every day. Do I always stick to it? I blame Corey. Not you, Corey. I'm talking about little Corey on the shoulder. I always joke like that because my more conservative side is I got to give credit to Passer for that because Passer's like one of the most conservative traders I know. But he's been trading like 30 years, but that's how he's been able to trade for 30 years. He don't care about big gains. He want to hit singles. He don't care about hitting home runs. You know what I'm saying? Corey be like YOLO. You know what I'm saying? So that's how I try to balance it out. Yeah, you know what I mean? But anyway, have a plan though. And it's not just good enough to have a plan. You got to stick to the plan. You know what I'm saying? I had a plan to lose weight for the last 30 years. Have I stuck to it all the time? Absolutely not. So you got to stick to a plan. It's not just good enough to have a plan, right? Position sizing, risk only 1% to 2% per trade, right? That's what they'll tell you if you take a class, right? So I may be a little bit more aggressive, but I'm going to give you the number that again, shout out to old TD Ameritrade, but, they would always talk about 1% to 2% per trade. So whatever kind of capital you have in your account, how do you manage your account and become a long-term trader, right? Not just trying to, gamble or hit a lottery ticket, 1% to 2% per trade. Diversification, spread capital across asset classes. Now, this right here is something that is debated amongst investors and traders all the time, right? And a lot of times people always go back to the whole Charlie Munger quote when he says that diversification is for people that don't know what they're doing. And I don't know how to break this to most of y'all, but most of us don't have insider information, right? So the idea of just being in one company or two companies doesn't really apply to us. Now, I think there's a happy medium. You also don't want to be in 1,000 companies. I've seen that too. The extreme where you got $10 and 1,000 things, especially now with the ability to buy fractions. People be all over the place. I think there's some sort of happy medium. One of the other trainings I'll give, is what was it? A Bacchus, the Bacchus training, right? I'll give them credit for this. Even though it's the falling out with those folks. But what I'll say is this: one of the things they said, well, they had their idea was they called it the circle of 20. You shouldn't have no more than 20 holdings, right? I would even like probably pare it down a little bit further than that.
7.
I like you say 7. You say 7. Their rule was no more than 20. My rule is probably, I think you trying to use the God hour. That's if you follow. 7 is cool though. I think 7 might be cool. I might go with that, Kamari. 7 is cool. You know what I mean? You know, what you think, Corey?
And and that's at the top, because like I like what you have too, because I think you got 4 or 5.
I have 3 holdings that encompass probably 95% of my portfolio. Then I have 5% that I just speculate on. But I know that I have a speculation bucket. I know
Right.
I'm out here wilding. But I have 3 things, that are primarily where all my chicken is. 3 ETFs, and I do have one mutual fund because that's in like a deferred comp account. That's like this goes. That's the S&P. So Pascal says 11 in the chat. He thinks that 11 is the number. Pascal, is that what you think should be the maximum number, or is that your number? But it's an interesting conversation. The point is you want to have some level of diversification, because there's other ways to get diversification by having a small number of holdings, right? So if I have, let's say, 4 holdings, but one of them is VU, and I have a lot of money in VU, then, you know what I'm saying? So, or VTSAX, then I'm still diversified to a certain level. But I just think that it's a great conversation, but it is a way to manage your risk by being spread out amongst multiple assets. You know what I mean? So 11 individual companies. Okay, got you.
Real quick, that's a great question. So for everybody that's in the chat, watching now, live or in the replay, let us know how many holdings do you have in your portfolio?
Yeah.
I'm at 3. I'm at 3 right now. I'm going to probably go to about 10.
Okay.
Just because those 3 are buying the other ones. So my portfolio right now is set up for the 3 that I have right now to buy the other
3.
The other 7 that I'm going to.
Oh, 7. All right. So all right. So Pascal says you got about 10. So for everybody watching, like, that's a great question, Kamar. Give me 2 answers though. Let me know what do you think is the proper way to diversify. What is the proper number of holdings to have? I would love to see what Dina thinks too. What's the proper number of holdings to have? And how many do you have, right? Because that might be different. That might be a different number. What do you think is the most you should have, and what do you have? But the point is, getting back to risk, diversification is a way to, to manage that. So, all right. So Dina did answer. Shout out to Dina. I was asking for Dina specifically. Dina's a legend in our chat. Dina be out here kicking gold's ass. She has 13 holdings, and 6 of those holdings are ETFs. So she has 6 ETFs, 7 companies. That's pretty solid right there. That's pretty solid. Common mistakes that increase your risk, though. One is overconfidence. All right. I just gave you a story about that. It's a true story. Thinking you can outsmart the market. The more I study the market, the more I realize that I'm not as smart as I think. Right. So how do I approach that? Because here's a true story. Another story time for you guys. My wife and hopefully her one of her best friends isn't watching this, right? But she has a best friend, and we went down to their wedding down south. And it was my first time meeting her husband. This is like one of my wife's best friends. And so we're talking, and what you do, blah blah blah, small talk as we go to their wedding, the day before their wedding. We had dinner with him, and he's like, I'm into investing, blah blah blah. All right, so we got common ground. So now we talking about investing. He was like, yeah, I started trading options like 3 months ago, but I mastered it, right? So I turned to my wife and I was like, their marriage ain't gonna work. She said, what do you mean? I said, Bo is an absolute liar. I said that to say, within 3 months, they were done because Bo was a liar. There's no way to master the market, right? That's the point of this. There's no way to master the market. I know people that have shown me the way in terms of investing and trading who've been doing this for 40, 50 years, who still study every day, and they will tell you that nobody ever masters the market. I've been trading and investing close to 30 years now, since a teenager. And it's funny, I was talking to Jabbar about this yesterday because I was trying to remember the company that I used to have to travel to give them my checks, right? I had to go out to Jenkintown, Old York Road, or 16th and Market. It was Scotch Trade. Remember Scotch Trade?
Yep.
I used to have to physically take them a check and put it into the brokerage account and then call to have them make a trade. So I've been trading and investing a long time, and I still feel like I know nothing. I shouldn't say nothing. I know a little, but I still feel like there's so much to learn. There's so much because the market is literally the world. It's how the world works. So if someone tells you that they've mastered anything, like you can master certain aspects of it, but you can't master investing overall. It's something that you consistently study at, and you have to always study at. You have to be a lifelong student, right? So anyway, overconfidence is a problem. Lack of research, investing without understanding. I talk about this often. The example I always use in this is going back to Enron. Some of you guys are too young to remember the Enron, but there's an excellent documentary about it called Smartest Guy in the Room. But the reason I never fell down for the Enron trick is because I have a simple question when someone brings me an individual company, whether that's a private business investment or whether that's something that's a publicly traded company. And that question is, how do they make money? And I used to ask people that about Enron, and no one could ever answer the question. They would start using all these buzzwords and all this stuff. I'm like, well, where do they make money? How do they make money? And what are their expenses? That's very simple questions. So lack of research. You got to do some research. You can't just be out here like throwing dartboard. You can't have a bonobo room. And for those who know what a bonobo room, you can look it up, where you have monkeys who just like throw feces at a wall and make decisions on that. That's a real thing, by the way. You got to learn to do research. Learn to do research. FOMO. Man, FOMO could be probably its own class on a Sunday. Matter of fact, we should do a FOMO class. I thought about FOMO yesterday because I kind of fell for FOMO myself. I'm in this group on Facebook. It's called, for those in Philly, it's called Roxborough Raves and Rants. And it's like all the people from Manayunk, Roxborough area of the city, they be on there talking about all kinds of stuff. And something came across my timeline, which was a new establishment not too far from where I live. And they sell carnival food. It's literally a carnival food restaurant. So they have stuff like funnel cake, all kinds of stuff like funnel cake, popcorn, hot dog, all the different stuff they sell at the carnival, right? So then Kamari was trolling me last night. Kamari sent me a message last night because him and Karan was out, drinking these beautiful hot chocolates that he know I love. So he was trolling me. And FOMO kicked in, like, man, everybody posting about this new place. I'm going to go. Then it occurred to me, I was like, yo, I'll be on TikTok, watching Keith Lee and watching Evil Keith Lee and all that. And, I went to restaurants based upon stuff that I've seen on TikTok. Even the Philly food bloggers, I've done that. And I was like, that's FOMO, right? That's FOMO. But then
social media is all about FOMO. But, when you said carnival, I thought you were talking about the black carnival. You were talking about regular carnivals. I thought you were talking about some Trinidad and Tobago. Some
no.
Nah, not those kind of carnivals.
But FOMO is a real thing, right? FOMO is a real thing, and I see it. I was on X yesterday, and someone was talking. People still out here chasing shit coins, and the lady was like, "Sign up my newsletter, and I'll tell you when stuff pops before it actually hits Coinbase." And I was like, "Man, FOMO is something that is difficult. That goes back to the psychology of investing and trading, but FOMO is such a real thing." And I have to admit, I fell for FOMO in the past. I'm getting better, though. FOMO doesn't affect me because what I learned over the years, and I think the most important lesson I got about investing and trading, and even in real estate, is the idea of running your own race. Whoa, what's going on over there?
My fault, bro.
But I think Corey might have clicked on one of them links he wasn't supposed to. But anyway, listen, the point is, the idea of running your own race, to me, is the most important lessons you can get as you're trying to build something for your family and you're building a portfolio. A lot of times that's difficult because we're on social media and people are sharing screenshots. They made 70,000 this day and 20,000 this day. And, what I'll tell you is this. I went to a mastermind a couple of years ago. I'm giving up all the secrets right now, right? I went to a mastermind a couple of years ago in Orlando. It was a ClickFunnels event. And some of your favorite financial influencers were there. And I was in a session and a dude was talking about there's a guy you can hire that is an expert at Photoshop that literally makes up joints that show that you made X amount in a day. It's a thing. And when I say some of your favorite financial influencers there are people that have millions of followers on Instagram and all that. They were in the room with me. And I was like, hold up. So this is a thing. And y'all all using the same dude. All right. Everything's fake. It's all fake. Right? So run your own race. I don't care if you got $500 in your account, if you got $500,000 in your account, run your own race. Do what makes you happy. Invest, but don't fall for all the nonsense on social media. I tell people, don't even believe me, right? And I'm someone that moves with integrity, but I don't even want you to believe me. I want you to learn to do your own research. Don't worry about FOMO and run your own race. To me, that is the most important thing you can do is learn to run your own race. That's not even a financial thing. That has nothing to do with any sort of model, any sort of statistic, any sort of move. It's psychological, but I think that's the best thing you can do. When you get in that space of, look, I'm going to do what I can do. This is the amount of money I can make. This is what I can allocate. And I'm worried about my family and moving this way. And I'm not really getting caught up on what's going on social media. That's a superpower, you know? No exit strategy. People not having an exit strategy. That's the thing. That's something that can increase your risk. Always know when it's time to take profits or run. Like, have that going into a trade. So we mentioned some of these already, so I'll fly through this. Tools help manage risk, right? Index funds and ETFs. One is a robo-advisor. By the way, robo-advisors, right? It's interesting. So again, back on my SoFi bag. SoFi has a robo-advisor. I opened up an account with the robo-advisor right next to my own personal account because I just want to do some science. I want to know, can I beat the robo-advisor? Right now, I'm smoking a boots, but I want to see over a long period of time, can they, so this is like competition for me. But anyway, portfolio trackers. I suggest personal thing. There's a lot of different applications and things you can use to track your portfolio. What I would like people to do is create your own though, right? Create your own Google Sheet to track your portfolio. Why did I say Google Sheet and not Excel? Google Sheet has the ability of pulling in Google Finance into Excel. So in real time, you can see what an actual asset is worth. So if you guys need help with that, let me know in the village. I'll give you the video because it's several videos that show you how to break that down. But I've created my own tracker, which is in Google Sheet, where I literally can tell you my net worth at any second. I'm poor, but I still track it though. Asset allocation calculators. How often do you guys think about rebalancing? Kamari, you're a former institutional investor. How often do you think about rebalancing?
Rebalancing right now, I'm not really thinking about rebalancing because I'm still in the deployment stage. But what I would advise, let's say for retirement portfolio, I think you should rebalance quarterly. Okay, quarterly. All right, that's quarterly to semi-annually. Okay, I would say quarterly at the minimum to me. I don't even like semi-annual. I like quarterly, right? Every quarter. I think every quarter is a certain things you could do. I'm not trying to get off topic, but review your beneficiaries. Review your estate documents every quarter. Just take a quick look. Anyway, for traders, have a trading journal, right? Something I've done, right? So I used to buy trading journals and do all this. I've created my own in Google Sheets again. Right? This is not an ad for Google Sheets. I just love Google Sheets. But and it's funny because everybody grew up on Excel, but I've been like finding myself using Google Sheets a lot more. But trading journals, I've created my own journal. For the record, Google's product is just as good as Microsoft's Office. So I don't even see the need to spend money on it anymore. It's not perfect one for one, but damn, it's close. Damn, it's close. No, listen, if it ain't better than Big, it's the closest one. I agree with you. And you don't have to pay for it. And this is coming from someone who still pays for Microsoft for whatever reason, because I find myself using more Google products. I know why I pay for it, because I got a bunch of stuff in OneDrive. I'm regretting having to move. That's really what it boils down to. But I'm a work in progress. With that being said, though, I created my own trading journal, so I know every entry, every exit, what the percentages I made, and I track that over time. And it's funny because I think I was telling Past this a couple of years ago. I made all these trades, right? I had 1 year. All right. True story. Let's open up the books. I had 1 year where I did like half an M, right, in terms of income from trading, and I thought I was big-ish, and then I realized I also lost about 480. So this was years ago, and I said the funny thing about tracking is, right? I'm being transparent with y'all. For most people, they would have showed you the 5. They wouldn't have showed you the fact that you lost most of it. I lost most of it, like literally. But what that did for me was this. All right, so now during the course of the year, I'm tracking all the time. I'm watching what's going on, so I want to learn to trade different. Because why am I wasting all my time to do this? At that point, what I realized is, I just wasted all my time. I wasted all this time because this is before I got to better systems where I'm sitting in front of the phone, not the computer. I try to do everything, and that's intentional, by the way. Wasting time, right? If you're going to trade and you're not a profitable trader, then why are you trading? I'm not doing this for fun.
You know what I'm saying? Like this isn't sports betting. Anyway, technical indicators we talked about, paper trading platforms. Don't be afraid to paper trade. Got to get that and be a t-shirt. Don't be afraid to paper trade until you have a skill set, or don't trade at all. That's another thing too. Risk reward calculators. You can create your own in Google Sheets again. Let's keep it moving though, y'all. Here's a real world example of someone like, and again, this isn't a trade, right? So someone enters Bitcoin at 60,000. He bought during a peak hype cycle. So Bitcoin saw a decline in price of like 50%. So then what happens? They sell at 30,000. Bitcoin recovers to 50,000, right? Your original position would have been recovered. Why did you buy Bitcoin if you weren't willing to withstand those huge drops? You probably shouldn't have bought it in the first place. But now, in this example, where's Bitcoin at now? Let me see. I'm going to tell you where it's at right now.
Yeah, well,
we are at 105,787. So we're about 106,000. So in this example, real world example, this person, you know, actually lost money, right? Because they weren't in it for the long haul. So when you buy something, you know, and I know that's difficult to do. It's difficult to watch your account. That's the thing about Bitcoin, which is funny. When you accumulate a full Bitcoin, or even more than a full Bitcoin, your net worth swings be crazy. Because if you lose, you know, 50%, watching that happen is difficult. Now, some believe that we'll never see a 50% decline in Bitcoin because the institutions have gotten into the place they've gotten into. I don't necessarily agree with that 1,000%, but I do think that the swings aren't going to be as rough as they used to be. With that being said, though, when it goes up, when we have crazy runs, when we go from, you know, 68,000 to 112,000, it's like the other side, right? So it works on both sides. But the point is, if you're going to get into an investment, do it for the long term, right? And understand your risk. Understand your risk in doing that. So here's my final takeaways. Risk is something that you have to deal with, right? You know, grown man bars are something you got to deal with. Accept risk as inevitable. Focus on management, not avoidance. Don't avoid the risk. Focus on the risk. Know your personal timeline. Ignore all the nonsense. Do what works best for you and match your strategy to your personal goals. The hardest part is this last thing, is to maintain discipline. Consistent risk management keeps you in the game. Here's the thing about wealth building. To me, the two keys to wealth building are consistency and discipline. And that's nothing that nobody can do for you. I can't do it for you. Susie Orman can't do it for you. None of your favorite. Robert Kiyosaki can't do it for you.
Oh, God.
You know what I'm saying? Dennis Kimbrough can't do it for you. Kamari Ellis can't do it for you. Corey Camp can't do it for you. Like, no one can help you with consistency and discipline. And by the way, I'm talking to myself as I say this, because, you know, I got other parts of my life I need to work on my consistency and discipline, you know. But that's the thing. You know the old saying is, how you do one thing is how you do the other thing. That's a damn lie, because there's certain parts of my life I'm completely disciplined at, and other parts I'm just not. So I say that to say this: work on your consistency, your discipline, run your own race, and accept the fact that there will be risk. Do not avoid risk. Risk is something that we all have to deal with, and is not talked about enough in terms of finance. The last thing I want to talk about is this. For my real estate folks out there, we have to understand risk, because one of the things I've gotten better at doing is not doing real estate deals for the sake of doing real estate deals. And for those that have been in real estate for a long period of time, you know exactly what I'm talking about. A lot of my realtors, my investors, my developers, landlords, a lot of times what I find, I have most of my clients, I would say 99% of my clients in real estate are investors. And one of the conversations that I find myself having week in and week out is, does this deal make sense from a number standpoint, or are you just tired of sitting around because you haven't bought a property in a while? And sometimes they'll think about that and say, you know what, you're right. We get into this habit of having to be in a deal or doing something. But the idea of risk, why are you getting into a project that's only going to pay you the same thing that you can make from a high yield savings account? You know, the difference is all the risk you're taking on, the risk of construction, the risk of dealing with the tenant, the risk of dealing with the city, the risk of paying these taxes. When you can take that same capital, right, put it into a high yield savings account, because that's all you're getting back when you do the numbers, do the knowledge. And when you do the knowledge, understand that before you risk capital, right, can you make more in a T-bill? People talk about Warren Buffett often like hoarding cash. It's the reason he's hoarding cash. He doesn't see a deal that's going to make more than money than he's making on hoarding the cash. So why take the risk? Risk is something that we have to deal with. You have to confront it head on and understand what the risks are, how to minimize the risk, and then stick to your own goals and maintain discipline and consistency and boom, you build a better portfolio for yourself and your family. That's all I have in my PowerPoint. I want to get to the comments before we get out of here. Appreciate you guys for sitting through one of my Sunday PowerPoints again. You know what I mean? But that's risk. Anything that you guys want to add, Corey or Kamari, to that?
There was one thing. Now, I don't know if y'all talked about this because my audio was doing something funky, so I went out and came back in. But you brought up paper trading, and you encourage people to do paper trading.
Mm-hmm.
And I'm cool with that. But I've seen a lot of people say, oh, I'm paper trading, I'm making money. paper trading and doing the real thing are totally different. Paper trading is good to understanding what buttons to click, how to use the platform. But when you have money on the line, the emotions are on the line. You're not going to be able to separate your emotions with your money. So start small, don't get excited, and just keep at it. That's all I got.
So here's the thing, right? You're correct. I look at paper trading like I love watching videos of people who talk about Kobe Bryant and his work ethic, right? And they often talk about Kobe wasn't the most athletic, he wasn't the most gifted, but he worked hard, right? And just the pure amount of reps he put in. I look at paper trading like doing that, right? So when you get into a real game, there's emotions, there's crowd, there's all these things. But a lot of times when you hear Kobe speak about it, it became easy to him because of all the reps he did in practice. I practice all this. You know what I mean? So me, I do a lot of public speaking. By the time I get in front of the audience public speaking, I don't walk through that presentation or that talk like so many times that it's like, it is what it is. Plus I'm a talent, so it is what it is. But, so it's like, but it's getting those reps in, and you get those reps in by doing the paper trades. That's all that is to me, right? And I do understand the difference, right? Because people feel like I'm just going to do this, but then when that emotion gets involved, you know what I'm saying? When you got little Corey on your shoulder, that's different. Little Corey might not be on your shoulder with a paper trade because it's not real, but you got to get those reps in because the other part you mentioned is important. Understanding what buttons to push, understanding how to do setups, all of that is important. I've seen people who try to do a trade. They don't do any paper trade. They open their account. They get on and what button do I push? I'm like, the market's open. You don't even know what button to push. Like, what you doing, beloved? Get your reps in, yo. Stop trying to skip parts. Get your reps in. So paper trading to me is important though. And
no, it's important, but it's not disagreement. But a lot of times people think it's one way when it's the other way.
Yeah,
that's all I got. That's all I got.
Okay, Wire Cool. Any thoughts from you, Core? Any thoughts you got, Core?
All of my important thoughts go counter to everything that y'all talking about. So I'm gonna mind my damn business because I like paper trading is ass because of what Kamari said. Like it because people don't do it correctly, right? So I play sports, right? And so what people think is that practice makes perfect, and practice doesn't make perfect. Perfect practice. Correct. Perfect practice makes perfect. And so people will paper trade and they give you $100,000 in your paper trading account, and then they be trading with $100,000 and they thinking they can do that same thing when they put their $1,000 or $2,000 or $5,000 in there, and it never turns out the same. So I don't like for people to paper trade because they don't do it right.
That's a whole different conversation because the idea is if you're going to do it right, right? So when you paper trade, even if you give you $100,000, still 1 or 2% is what you'd be risking. The same way you're going to trade in real life is how you treat your paper trading, right? Because again, it's perfect practice you're looking for, but you got to get the reps in. You got to know how the application works. Risk overall, we can get to the comments in a second, but risk overall, to me, in terms of managing risk, is almost like, here's an analogy for you. Putting on a seatbelt, right? It's not to say that you can't get harmed in a crash or what have you, but it's just another way of protecting yourself. Understanding risk. You protect yourself by understanding risk. It's putting a seatbelt on when you get in the car. Can't stop you from banging out, right? If you can't drive, you can't drive. Shout out to all my people from Jersey, no shade. But if you can't drive, you can't drive.
All the shade.
But putting a seatbelt on can help you. I know I ain't the only one that knows. Never mind. I'm sorry. I digress, man. Let's get to the comments, Kamari. Let's get to the comments before we get out of here, man. I don't want my folks from Jersey.
Yo, the New Jerusalem slander is crazy. Yo, what up, Shelby? Happy Father's Day to you. Love you, bro. All right. Gerald, happy Father's Day to you as well, brother. All right. Miss Cookie. Hey, Miss Cookie. How are you?
Miss Cookie, Jarrell, what up, though? Happy Father's Day to all the
Nicole.
fathers. Nicole, what's really, really
the
good?
Honey Hustler. What's going on?
All right. But thank you. Happy Father's Day to you as well. I mean, that's wrong. Thank you for that.
Yeah, I'm about to say, what you know that we don't know?
Yeah, my bad. No.
Bro.
That was a reflex just to say thank you back. But no, today is the Father's Day. Gotcha.
Kamari, so humble. He's so used to this, like saying, like saying to you that he don't even,
Yeah. Thank you, Pascal. Pascal, I don't know if you're a father, but if you are, happy Father's Day to you.
Listen, man, I don't have any kids, but like I son so many dudes out here that I'm sorry.
All right, so happy Father's Day to you too, Jimmy, because I know you do serve in the capacity. No, real rap. This ain't even a joke. You are. Listen, so I tell people all the time, like, I have my father, but I have a lot of other father figures that were in my life that helped to make me who I am today, and I'm thankful for them. And some of them didn't have children. They are still fathers to me. I am one of their sons. I'm cool with that.
I agree with you, and I want to say shout out to all my uncles. I got some of the best uncles, and my godfather is amazing. Like, so, I always joke. I was like, the one good thing my father did is who he picked for my godfather, right? Because my father had some friends who from all different walks of life. So, when he came to pick my godparent, I got one of his more responsible friends, and he's been a blessing in my life. So I got uncles and godparents that are just like, I wouldn't be here if it wasn't for them. So. You're right about that, but I was just trying to make a joke. You know what I mean.
We got to serious sometimes because Jimmy always wants to joke. He is the jokester.
Listen, because life is serious, bro. So I like to laugh because life can get serious, bro. Like, and we ain't learned nothing last week, bro.
Be wilding, bro. He's talking about he was sunning folks so long that he gotta be
So Pascal said billions in dividends. So he's referring to the point Jimmy was making about Steve Ballmer and how he gets billions every year in Microsoft dividends.
Microsoft dividends.
Yep. All right, hey Dana, thank you. Appreciate you.
Salute.
All right, Pascal's got 11 positions in his portfolio.
I think he said 11 is the max. I think he said he got 10, but no more than 11 is what you should have.
Okay. All right.
He tries to stay under. We got about 10.
Okay.
Or the other way around. Is he saying he got 11, but he thinks 10 is the max? Either way, 10 or 11 is Pascal's numbers.
Yes, mostly ETFs. All right. Dina's got 13, as said before.
6 ETFs.
What up, Rich?
What up, Rich?
Happy Father's Day, Rich.
Hey, Rich, no shade. I think Rich is the new Jeru, so that was no shade to you, Rich. Rich, I'm pretty sure Rich could drive.
All right, Pascal says I use paper trading to test strategies. Yes,
as you should.
The way it should be tested. Just don't use it to hype up inflated sense of ego. All right, and what up to you? Happy Father's Day to you as well. And says happy Father's Day to the panel and the chat. So thank you for that. I had a father, but my 8th grade hoop coach, that dude was the epitome of a strong black father figure.
Listen, man, I had a coach when I was I played for Mallory, Mr. George Anderson. He was amazing too, bro. Like he kept me out of a lot of trouble. Like he just a good dude, man. Like so, Kamari's right, man. That's again, and I always talk about this. I grew up in a village, like we was in the city, but village mindset. So everybody was looking out for everybody, man. So, and I know Corey has his experience too. Corey often talks about what his uncles meant to him. So,
yeah.
My uncles. They kept me from. I'm just gonna keep it. They just kept me from dying, bro. Like, because a lot of the times, man, I've been getting in situations. My uncles were like, "Whatever you do to him, you got to do to me first," and then so it never happened. So yeah, I mean, like, so congratulations to them brothers for helping me make it to this age. This big old age, because they definitely made it so that I made it. You know what I mean? So
yeah, man.
So Rick said, I think he had a traumatic experience in New Jerusalem.
I had traumatic experiences in Philadelphia from them coming over the bridge.
No, Rich, that's the thing in Philly. Like I don't know where it came from. I'm not sure where it came from because I've seen it. But it's a joke in Philadelphia that when you see Jersey plates, stay away because they be wilding. I think it's because y'all got all them damn roundabouts, man.
They got the roundabouts. Yeah, they just be doing whatever they want, man.
Yeah, y'all don't believe in left turns. Y'all don't believe in left turns in Jersey. So
if I see Jersey plates, I try to get I either move back some cars or I try to drive around them and get way ahead of them. Like I don't want to be nowhere near them boys.
Oh man, oh man.
I was gonna make another comment, but I don't want you to call me racist because it's like there's certain ethnicities that come with jersey plates and they got both. I'm pulling over.
Just get out the way, yeah.
So, Rich, is that your top three? S&P, MicroStrategies. What's FLD?
Fold.
Okay. Is that your top three? Those your three holdings?
Hey, listen, Fold is one of my individual holdings, dog. I just want to go to a shareholders meeting because I'm a Fold stand.
All right. You know what? I'm gonna look at Fold. So we're gonna start crashing shareholders meetings. I think that should be a thing for us to do.
That definitely should be our next thing, man. Like, yeah, I'm gonna crash shareholders meetings and get up and speak and make a Nino Brown speech right on the shareholders floor.
No Uzis made in Harlem.
Uzis made in Harlem. Hey man, that's one of the greatest speeches ever, man. It's like the Gettysburg Address for the hood.
Y'all are hilarious.
Oh, man, so right. Nino Brown, I'm going down. I'm taking everybody with me. That movie is pure comedy. When you watch it,
like when I watched it as a kind of like a teenager, like it had different meaning.
I watched it recently, and I was crying. I'm gonna tell you what made me really laugh. When they got to the wedding scene, Keith Sweat is in the wedding scene singing like "There You Go, Telling Me No." I said, "This is not a wedding song. Why are you singing this at the wedding, yo?"
Because the song rocks. That's why. Because Keith Sweat is the king of R&B. That's why.
Pure chaos. I know what you're doing right there. I'm not falling for that. But pure chaos. Man. New Jack City is a comedy, yo.
All right, so that movie, because Corey's been on us, we got to review that in The Village. We got to look all the wealth messages and anti-wealth messages in that movie.
It's another movie I want to review for pure comedy reasons. What's the movie that Alan Payne played in? He was a hustler in Boston, and man, Blue Hill Avenue. You ever see Blue Hill Avenue?
Boston. Oh yeah. You know what? So hold on. So Jimmy, we might have something in common. I love B-rate movies. I love B-rate movies because they're so bad. I laugh at them.
Oh yeah, absolutely. Listen, I used to watch all the YouTube series back in the day.
So that movie right there, I've watched several times, and I crack up every time I watch it.
Man. Listen, we can do it for the shits and giggles, but for nothing.
I got a meme that I made in that video, like with Alan Payne and the joint and Bulls, like, why do you keep me? Because I'm good at it. He told the old head that he keep hustling because I'm sorry, we way off the rails. We talk about risk in the stock market, but for those who haven't seen Blue Hill Avenue, pure comedy. New Jack City is a comedy now. We have to move from like drama to comedy. But yeah, we're gonna talk about
hold on. Go back to Blue Hill Avenue, right? Gotta get straight to that. Michael Talaferro is hilarious in that joint.
Yes.
And Clarence Williams.
I think I might watch that today, yo. Just because we brought it up.
I might download it and watch it on my flight, man.
Hey, Rich. I know you've seen Blue Hill Avenue because Rich be in the Negro verse just as much as Kamari. But Rich is a hip hop head, though.
All right, so before we end the show, I'm gonna ask y'all a question. Which shaft was better? I'm sorry.
Yo.
First of all, I got the wrong title. What Superfly was better, the original or the remake?
Hold up, bro. Like, where your mind at? All right,
come on, man. Where your mind at? What Superfly?
You my Superfly? Never mind. All right, so I can't answer that question because I think I like the new one more than most people. I think the new one was dope.
I think the new one's better than the original, honestly.
Oh, you got the gonads to say it, pause. Like, I think that's one of those things that I want to say, but I haven't brought myself to say it.
Listen, Michael K. Williams was in it.
It's not nearly on the same level as the old. What is wrong with y'all, man?
Man, the acting was just as good.
No, man, no.
Have you watched it, Core? Have you watched it?
What you talking about? Have I watched it? Well, I watched the bull with the pump, like he got the pump on his forehead. Like, no, man.
He got the do.
Hey, plus, I think I might like it also because he was getting Bitcoin in that joint. So I think that might be a little biased. But I do think the adaptation was dope though. But
I guess, man.
But here's the funny thing about this conversation. I've never said that publicly. I've never said it privately either. Like, I thought I was on an island with that one, yo.
That's what I said. We might have more in common because we both like B-rate movies.
Yeah, I love B-rate movies.
I mean, it's a B-rate movie. See, y'all take enjoyment from B-rate. Only B-rate movies I would watch again are those with hyper violence, where
Jones,
where people, where a lot of people of male descent get killed.
Oh, you must be a huge fan of what's main man name? That's all he do is B-rate action movies. And he make $1 billion. What's the boy name? The beekeeper boy.
Yeah, him. Yep.
Jason Statham.
I read an article about
Jason Statham is my guy, man, because he just do nothing but beat up people and slap.
I read an article. I think it was Fortune or Forbes did an article on him. He was talking about like his net worth and how much money he's worth in doing them joints. And it was like he don't even like really put out blockbuster movie joints, but he like owns a whole category, which is like the pure action B-rate joint. Like that, he's like the king of that category.
Yo, my man probably make like $50 million a year, $100 million a year. Because I ain't gonna lie, man. Every time I see Statham, I know somebody gonna get the hell slapped out of him. So I'm damn for sure watching them.
I ain't gonna lie though. I love his movies too, because what I like about his movies is most of the time he's fighting like some sort of super conspiracy, big entity type thing, and he's like, it's almost like a hero's journey. Like, it's David and Goliath, but
Statham gets all my my streams because I don't pay for movies, but he gets all of my streams.
All right, so Jimmy, have you watched Twat?
What is Twat?
I watched every one of them, not just the part one. I watched 2 and 3.
It's a B-rate movie. It's a B-rate black movie. Like there's a whole genre of B-rate black movies, though.
I feel left out. I've seen almost all of them. What is Twat?
Yo, I didn't know, Kamar. I didn't know you went down this rabbit hole, bro. We gotta exchange notes.
Let's do this on another show.
Listen,
right, that's supposed to be for Sunday. This is supposed to be for Friday.
All right, we're gonna take this for Friday. Friday is about black wealth and B-rate movies. Because I ain't gonna lie to you, dog. I went down the Nigerian B-rate movie rabbit hole on Netflix. You got it.
All right. Well, listen, everybody. Have a happy Father's Day. Celebrate your fathers. I saw a report that said $10 billion more money is spent on Mother's Day than Father's Day. I get it, but make sure y'all show y'all daddy some love.
Real quick, before we get out of here, let's get these last comments because
Oh, we got some more. I missed some.
They was clapping at you because of your comment, Lex Steele.
But I do got to get out of here. I got to take.
I know. There's only a couple comments with Shaq. Yeah, that was wild. And Rich said, "I don't even play the pause game, but that was infinity pause." The Rock movies, the Rock movies, definitely action movies. Yeah, and Ant says that Jason Statham is. Ant, by the way, Ant, I got your Zelle. Just want you know, I got the Zelle. Thank you for donation to the camp. We got
Appreciate you, man.
We got it. We're gonna try it and rate it 1. I'm like, we got it though. Appreciate you, bro. But yeah, man. So all right. So today we talked about Risk. We talked about B-rate black movies. We talked about Jason Statham. So full show today on Sunday, man. Full show. We appreciate y'all. We love y'all. Thank you guys that supported yesterday. Shout out to Camille too. Camille didn't even make it through and was like, she sent the joint through like, coffee on me. I can't make it. It'll come down. So that was good too. Again, camp starts first
July
week.
5th.
July 5th is the first day of the camp. Please, if you can, share it out. Just send it the website, bthcamp.com. Send it to your family folks. Tell them to sign up, register. Man, that's our next community thing. More community events coming up. We're scheduled. We got our next podcast, Cash Mob, we thinking about. Also, we got something special coming after the camp we're working on too in Germantown. So that's going to be coming up soon. So we got a lot going on in the community. So we appreciate you. We love you. And we'll see you guys Wealthy Wednesdays, right?
Later.
Peace.